Welcome back, investors, to Ticker Time News. I'm Adam, and staying true to form, Johnson & Johnson, ticker symbol J&J, surpassed EPS expectations once again in Q1 22, extending its win streak to cover more than 5 years. That operational excellence is helping the company to overcome a small top-line miss and a reduced fiscal year 22 outlook. In both cases, the shortfalls come from supply chain constraints in J&J's skin health and beauty products category and waning demand for the company's COVID-19 vaccine. In fact, J&J actually suspended its guidance on vaccine sales due to a global supply surplus and demand uncertainty. The suspension of J&J's vaccine guidance illustrates how far it has fallen behind Pfizer and Moderna, both of which use mRNA-based technology. In January, J&J forecasted that vaccine sales could reach $3 to $3.5 billion this year in fiscal year 22. But after recording sales of only $457 million in Q1, mostly international, it's tracking well below that projection. Meanwhile, Pfizer and Moderna expect to generate vaccine revenue of $32 billion for Pfizer and $19 billion for Moderna in 2022. So, even if J&J achieved the high end of its vaccine guidance, total vaccine sales would still only represent about 3% of total revenue this year. So, the demand erosion is hardly devastating from a growth or even a financial health perspective. More important is the performance of its core business segments, which was actually mixed overall in Q1. The pharmaceutical segment is J&J's largest business at nearly 60% of total revenue, and it's the best performing segment. Operational sales increased 9.3% to $12.9 billion. It's standing as the highest growth segment within J&J, goes back many quarters, and is a function of the company's strategy to transform itself into a pharmaceutical powerhouse. In particular, the company has expanded its oncology, immunology, and hypertension portfolios through many acquisitions. This heightened focus is totally paying off for J&J's immunology and oncology portfolios. They generate amazing operational sales growth. Immunology grew by 7.5%, and oncology grew by 14.9%. And last November, the company announced its intention to spin off its consumer health segment, leaving the pharmaceutical and medical device segments as the new Johnson & Johnson. This action will allow it to fully invest in emerging pharmaceutical opportunities like gene therapy, while building stronger market positions in orthopedics, vision, and wound closure. Now, as a standalone company, the consumer health business may also post stronger results. As it currently stands, though, the segment continues to struggle, as operational sales grew just by 1.6% to $3.6 billion. Like last quarter, supply chain disruptions impacted the skin health and beauty category, leading to an 11% drop in sales for those products. On the positive side, over-the-counter sales jumped by 17.1%, led by strength in its Tylenol and Motrin brands. So the main takeaway is that investors don't seem overly concerned about diminishing vaccine sales or even the supply chain troubles that are hurting J&J's consumer health segment. Instead, the spotlight remains on the company's pharmaceutical segment, which continues to generate solid growth ahead of a transformational spinoff next year. What do you think about J&J's spinoff, and do you think investors are looking in the right places on J&J's earnings report? Let me know in the comments below, as your comments help us all to better understand Johnson & Johnson. Give us a hand by smashing that like button, sharing this video wherever you can, and beat the market with us by clicking the first link in the description. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.